guys, David Madrid with Infinite Lending. Welcome to my channel. All right, today's video is about beating mortgage interest rates and winning in real estate in today's market. Got a hack for you. And the hack is, gotta mute that. The hack is a 3-2-1 buy down or a 2-1 buy down. Now, well, David, what in the world is a 3-2-1 and a 2-1 buy down? Well, this is the perfect video because I'm about to explain it. Okay, I was gonna set this down, but it ain't gonna work. So I don't even know where I parked. So let's walk and talk. All right, so a temporary buy down is, let's go with the 3-2-1 buy down. Let's say the market rates are, I'm gonna put right here, since I don't want to advertise rates, let's say these averages right here. I'm going to put a picture here somewhere about what are rates today. So a 3-2-1 buy down is going to, I believe I saw the rate was like 7.5 something. So just to make it simple, hopefully it's 7.5 something, 7.5. A 3-2-1 is going to lower the interest rate on that mortgage. It's a feature. It is a fixed loan. However, the prepaid interest for the first year, second, and third year are paid generally by the seller. So if you're looking to have a great interest rate right now, this is a great way to battle interest rates, okay? So let's get to the point. Let's say the rate is 7.5. For example, the first year, it's going to be 3% lower, okay? Again, it's the first year, you're gonna be at 4.5, okay? So that is going to be huge monthly savings for that first year. Now that second year, it's gonna go lower by 2%. So if it's 7.5 minus 2, you're at 5.5. Okay, and then that third year is going to go to 6.5, and then on that fourth year, the fourth year is going to fully amortize at the regular payment. Now, the reason, and then the 2-1 is kind of the same thing. It is just a 2% better than what it is, whatever the mortgage rate is. So now this is a huge win because if a seller is paying for it, right? They're paying for you to get a better interest rate for the first couple. They're paying that prepaid interest. That's all it is. It is a prepaid interest for that first year, second year, and that third year. So if you're able to negotiate that a seller offers you concessions, and you can either do right now in this market rates, I'm done trying to figure out where rates are going to go. Rates for the last several months have been coming down. They came down at the end of January. I'm blessed that I've locked everyone that I locked during that period of time because they got locked in at a really good interest rate. But now we're seeing interest rates continuing to go up this week, and this past week has been just rates going up, and the data that keeps coming out is suggesting that we may still be here through 2024. But if you're looking to buy a home, I believe this is a perfect opportunity. And yes, I am trying to sell you on the idea that when interest rates go down, just think this through. If rates continue to go down, what is the most likely outcome that would happen to the market, right? So if you are waiting for mortgage interest rates right now, what do you think everyone else is doing? They're waiting for mortgage rates to go down. Now, what's going to potentially happen to home values if we are all waiting for rates to go down? You know, my personal opinion, based on what I know, purchase prices will go up, right? Now, if you have the best thing that I love about these features, the buy down features, is that let's say year one goes by, you're in the, when you're in, what happens to that entire money that was paid by the seller? Unlike a permanent buy down, that money is prorated. Let's say you refinance, it is prorated. When the payoff comes through, they reduce whatever prorated amount from that payoff, meaning that you still won. Meaning that if you took advantage of one of these features, buy downs, whether it was 3-2-1 buy down or a 2-1 buy down, that money that was paid by the seller that you negotiated is still there. Again, it's a prorated amount. Whatever was used up during that period of time is what's going to be reduced from the balance. It's not a refund. You're not going to get money back. You're going to get, the way it comes back is, if we're going to go ahead and refinance, we're going to request a payoff. Let's say it's, $300,000 and you got $10,000 left, 15, whatever that prorated amount is, it's going to be deducted from the loan balance during that period of time that you refinance. So obviously it's going to be hard for anyone to calculate because we don't know when you're going to refinance, right? But if you can get an interest rate much better, much below a market rate, and anticipate that rates are going to come down in 1 year, 2 years, or 3 years, you would have been better off, right, buying a home today using this feature in comparison to waiting for rates to come down. I'm just simply giving you another way to look at buying a home today in 2024. It is April, I think May's tomorrow. It's already May 2024. So if you're on the fence of buying a home or are considering buying a home, reach out to a lender and a real estate agent that you trust. If it's me, I'm in Arizona, I can definitely help you in all of Arizona. Let's have a conversation. I'll put links below where you can either book an appointment, you can either apply now if you think this is going to be a good move. If you're not ready, that's okay. Let's book a call. There's a calendar, link is below. Book a call and let's have a conversation. Let's work through this and find out if buying a home is right for you. Buying a home right now is not for everyone, okay? If you have no money saved up, if you have unstable income, your job is, on and off, you don't know where you're going to be in 6 months, a year, 3 years. Generally, what you want to do is you're looking for stability. You're looking for money for reserves. You want to have money saved up. If anything were to happen to your income, you want to have some money saved up for rainy days. Now, buying a home, the last thing you want to go do is go run all your credit cards and, max out everything just for the sake of furnishing your home. So again, make sure you plan this out. There is expenses when you're buying a home. So you gotta make sure that buying a home is in the cards for you. This is just simply another opportunity to look at it rather than sitting on the sidelines and waiting for mortgage interest rates to come down, because this is how you're gonna beat the more high mortgage interest rates today, okay? Now, I say to end this, full disclosure, I don't want you getting into a mortgage using one of these features, assuming that you're gonna refinance in the next couple of years. It's very, very, very important that you understand two things. Number one, we are not gonna qualify you based on that lower interest rate. A lender is gonna qualify you based on whatever the mortgage interest rate that you are qualifying for at the max, meaning that if in my example that I've been talking about is 7.5, a lender's gonna underwrite the loan based on a 7.5% interest rate, okay? I don't want you to think, I want you with the mindset that you're paying a 7.5, and that if you're doing this, you put that money aside. You were gonna do it anyways. You were gonna potentially buy a house, right? Put that money, save that money. I saw a Facebook or Instagram informational image that said that 60% of Americans do not have $1,000 saved for an emergency. That to me is shocking, right? It is shocking the amount of people that don't have that kind of money. So I say that I cannot express it in any other way. Take into consideration that you're buying a home assuming that higher interest rate, okay? I don't want you buying a home and then in 3, 6 months, a year, you got yourself in some financial trouble and you can't keep up with that home. So that's the last thing I want to do. So I say that, ending, this is a hack on how you can beat high mortgage interest rates today. And shout out to Adela, because she's one that is on the fence. She's got money saved up. She's gonna put 20% down on a home. But our conversation today was, I'm going to wait. And I said, all power, completely respect your decision. However, I want you to take a look at this today. Guess what? We're shopping for a home, guys. So, Either she goes and pays $3,500 a month in rent, or takes advantage of this and saves a little bit of money on a monthly basis. So if you're looking to buy a home, explore your options, okay? And I don't have anything else to say. A lot of misconception about this is, people assuming that it's an ARM. It is not an ARM. It is a 30-year fixed loan that happens to have a feature where we buy down the interest rate temporarily. And the best thing about this is that it's negotiated to be paid by the seller. You don't want this paid by the lender. That's just gonna cost you more money. So anyways, if you have any questions, if you like this content, please hit the like button. If you want to continue getting notifications of my content that I'm posting, subscribe, hit the like and the bell notification so you're alerted when new videos are posted. So my goal is to continue to educate and empower future homeowners and local real estate agents, well, actually agents across the country. But I'm in Arizona, licensed in Arizona. And again, I'm just looking to help, figuring out ways where you can win today. All right, thank you guys.